Hello there, I hope that you are doing well. During today's lecture, I will be discussing trading consolidating markets, utilizing time cycles and key arrays. I will share with you how I was able to short the high of the day on Wednesday on the Nasdaq futures and how I was able to buy the low of the morning session on Thursday, utilizing these time cycles and these very specific arrays. If we go to the daily chart of Nasdaq, what I want you to see is that last week during the US elections, Nasdaq was repriced towards the old all-time high. When we saw this quick repricing higher taking place towards that buy-side liquidity objective, the market began consolidating. This can be anticipated when such a key time-based liquidity objective gets reached. Towards the latter part of the week, we saw the market expand towards the downside and it reached this daily BC. Going into next week, I will be monitoring the reaction to this daily BC to gauge the higher time frame order flow. That is something for you to keep in mind. If we go into the hourly time frame then, what I want you to see is the following. I want you to see that I have this new week opening gap, this gray box annotated. Next to that, I have this hourly BC annotated. The reason why is because these two ranges were for me the most important ranges last week. This new week opening gap displaced through that old all-time high price level. What we then see is that the market consolidates above that new week opening gap, and then during the morning session on Monday, we see the market expand towards the downside. Notice that it closes below this new week opening gap. From that moment in time, what you see is that the new week opening gap begins to function as resistance on price. Meaning on Tuesday you can see that shorting opportunities presented itself from that range during both the London as the morning session right here. What was the market drawn towards? The market was drawn towards this very specific hourly BC. Notice that during the Tuesday afternoon session, we formed the low of day here before expanding higher. Now, what I will share with you is a short clip from my mentorship market review in advance of the overall weekly delivery. And what I need you to understand, guys, is the following. What I need you to understand is that due to the fact that we've taken out a key buy-side liquidity objective, that all-time high, it's not surprising if the markets would go into a consolidation profile for a while before the real move begins to take place. Therefore, we need to sit and wait before one-side order flow comes in play. There you can see that I had these ranges on my chart. And the reason why I had these specific ranges on my chart is due to the following. This new week opening gap was important because it displaced through that old all-time high. Therefore, the moment that we displace below that new week opening gap and below that old all-time high, I'm treating this new week opening gap as my range high. Meaning every single time that the market is reaching that price range, I'm anticipating shorting opportunities to present itself. I was treating this hourly BC as my range low. Meaning every single time that the market reached that hourly BC, I was anticipating buying opportunities to take place. What I'm basically saying to you is the following. What I'm saying to you is that you could literally have played ping pong. Short the new week opening gap, buy the BC. Short the new week opening gap, buy the BC. Short the new week opening gap, buy the BC, etc. And that is how you can determine whether or not a market is range bound when it's stuck in between key arrays. In this case, the hourly BC and this new week opening gap price range. The moment that we displaced below that hourly BC by this candle right here, I want you to see that it functioned as resistance on price, and then we saw the market expand towards the downside on Friday. Now, what I will do with you is the following. What I will do with you is I will pay attention to the following delivery. First of all, I'm going to pay attention with you to the delivery which took place on Wednesday during the afternoon session right here. And secondly, I'm going to pay attention with you to the delivery which took place on Thursday during the morning session. Why specifically these sessions, you might be wondering, because these are the sessions which took place after the CPR release which took place on Wednesday. What I want you to see on this hourly chart is the following. During the morning session, the CPR release took place. CPI was utilized to reprice Nasdaq in close proximity to that previous daily high back into that new week opening gap's price range. When we formed the high of the morning session here, the market repriced towards the downside, trading back into that hourly BC. Notice that it stopped right in advance of the Tuesday low. We then saw the market expand towards the upside, taking out the morning session high and taking out the previous daily high. When this occurred, I was anticipating that the afternoon session would likely draw towards sell-side liquidity next. Sell-side liquidity resting below the lows which got engineered during this expansion leg higher. Notice that we also have an hourly BC right here, which we can target. If we then pay attention to Nasdaq on the left and EOS on the right, what I want you to see is that Nasdaq took out the previous daily high during the afternoon session, whilst ES fell short of it. Notice that ES made a lower high relative to that Tuesday high. That right there is SMT relative to a previous day's high. When you see that, that's a sign that order flow might change soon if the underlying narrative is that we should see the market expand towards the downside soon. Why should the market expand towards the downside soon? Because we reached the range high of that new week opening gap. Here we are on the 1 minute chart of Nasdaq. As you can see, during the launch cycle, the market initially opened up and had this sudden drop towards the downside. We formed the low of the launch cycle and the market began expanding towards the upside. Notice that during this expansion there was a consolidation which took place right here. Notice that they created these relatively equal lows which were very smooth in my opinion. When we then saw the market expand higher, we saw it open up at 1 p.m. for that second PM cycle and began consolidating. When this consolidation ended, we saw one more impulse leg towards the upside taking place, where the market repriced higher quickly and we saw these imbalances get created. Notice that this second imbalance forms whilst we're repricing above that previous daily high. The market trades above the previous daily high and at 1:56 p.m. we see it eventually roll over. We see it form the high of the day and it begins to displace towards the downside. I went short the moment that I saw a price displace below the previous day high and below this 1 minute BC, and I utilized that 1 minute BC as an inversion for value gap on price. Notice that I went short inside of this candle right here, which opened up, repriced higher with this very tiny wick, referring back to that 1 minute BC, utilizing it as an inversion for value gap before expanding lower. When we then displaced below this lower BC as well, I pyramided inside of that and I then utilized every single retracement higher as a potential shorting opportunity. What I want you to see, guys, is that there are plenty of opportunities to get in sync with a market move when you've missed out on the ideal entry. Meaning if you missed out on this entry opportunity right here, you could have utilized this 1 minute inversion for value gap as a potential entry opportunity. Or if you missed out on that 1 minute inversion for value gap entry, you could have utilized this retracement higher as another entry opportunity. And that is what you need to understand. Every single pyramid which you saw me take was a potential shorting opportunity for one trade. Now I parsed it accordingly when the market reached, for example, this 1 minute BC right here and it took out these relatively equal lows. What I want you to see is that this was a beautiful expansion towards the downside after the high of day formed above that previous day high. Notice that eventually the market reaches that hourly BC and that is where my far in partial took place before my trail stop got hit. The reason why Nasdaq did not complete the market maker sell model targeting the launch cycle low was due to the fact that ES already took out the launch cycle low. So that was time cycle SMT. Yep, go into your own charts and investigate. All in all, this was a beautiful expansion lower and it was a very clean trade. Now, if we pay attention to Thursday's morning session then, what I want you to see is that during Thursday's delivery, we initially saw the market reprice higher from the midnight open and it formed the high of day here. We saw the market then expand towards the downside, taking out the relatively equal lows which got engineered during the previous 2 days inside of this hourly BC. And here comes something interesting. Do you notice that on Wednesday during the afternoon session, I referred to a high which formed inside of the range high? I referred to the previous day high. On Thursday, I'm referring to relatively equal lows which got formed inside of the range row of that RBC. Meaning, if we do not see price trade away from that range row or range high right away after having traded into that, price is likely going to have another dive deeper into it before offering potential buy side. Listen to that again if you do not understand it yet. See the market take out those relative vehicle lows, and then on the lower time frames we saw a market make a buying model present itself inside of this repricing higher. If we pay attention to ES then, what I want you to see is that there was SMT relative to those previous daily lows with regards to ES and Nasdaq. Where Nasdaq took out those relative vehicle lows, you can see that ES never did that until the PM session came in play. Therefore, during the morning session, we can anticipate buying opportunities to present themselves. So even if the market doesn't continue the expansion which we see coming, we can still be profitable because we're taking partials at the logical levels. If we pay attention to the 1 minute chart then, here you can see my executions for this morning session. I'm going to walk you through this full delivery and I'm going to share with you why I traded outside the macro window from 9:45 to 10:15. I know that these executions arrows look probably way too good to be true, but I literally uploaded my live recording of this trade from the moment I entered to the moment I exit on my YouTube channel. So I highly suggest you to watch that. From the 9:30 open, we initially see the market reprice higher. Notice that there was an SMT on the highs and the market repriced towards the downside. It trades into that RBC near the end of that second morning cycle from 8:30 to 10 a.m. Notice that when we reach that RBC, however, the market begins to consolidate. And all throughout the macro of 9:45 to 10:15, the market is just going back and forth, back and forth, back and forth. When I see that, I know that the moment that we see manipulation lower taking place, the distribution is likely going to take place afterwards. This is my anticipation for the delivery profile for this morning session. When the macro doesn't deliver, anticipate that shortly after the macro, the market will seek to manipulate into the point of interest before reversing. That is something for your notes. What I want you to see is that the previous cycle low formed in advance of those daily lows. Therefore, we didn't only have a short-term or a shorter-term sales at the creative objective of a previous 90-minute cycle low inside of that RBC, but we also had those previous daily lows. We see the market quickly expand towards the downside. It has this quick and sudden drop, which is very important, into the point of interest. And if you apply 50% of that RBC to your own charts, you will see that the exact low of the morning session formed inside of this range. Earlier last week, I shared with you a video in which I explained my trading view settings. And in that video, I provided you with 50% of that RBC. And it was actually quite interesting to see that reaction to that level, wouldn't you say? And that is, of course, random. But anyhow, at 10:19, we form the low of the morning session and the market begins to expand towards the upside. From this moment in time, I know that we're likely going to see a change in state of delivery taking place, where we change from sell program to buy program for the near term. What is IPDA referring to? IPDA is referring to the 9:30 open price right here and to this 1 minute CB, which displaced through that 9:30 open price. Notice that we have relative equal highs engineered here, and this is one market maker buy model fractal with an original consolidation up here, smart money reversal at 50% of that RBC, and the right side of the curve delivering right here. If we pay attention to the 15-second chart then, what I want you to see is that on the 15-second chart, this drop towards the downside is even more obvious. Notice how quick this repricing lower was. This is what I want to see in advance of my smart money reversals. We take out those relative equal lows from the hourly chart, those daily lows, with this down close candle right here. Notice that this down close candle is very quick and sudden, just like this sequence of down close candles. At 10:19, we form the low of the morning session, and at 10:20 we see the market immediately reprice higher and it crosses the open of this down close candle. This to me is the change in the state of delivery, and I'm going long the moment that price crosses the open of this down close candle. This down close candle is a bullish order block. As you can see from this bullish order block, I have annotated the range from the high to low. Notice that 50% of this bullish order block is right here. This is mean threshold of this order block. I do not want to see the market displace below mean threshold of this bullish order block. Notice that it reprices into 50% of that bullish order block and it just drops below it, but notice that the bodies keep on closing inside of the higher end of this range. The market is consolidating for a bit and it immediately reprices towards this CB right here on the left side of the curve. Notice that we form a higher in this CB and we then have one more drop lower into the bullish order block its respective price range. The market then displaces higher and it retraces into this down close candle and are pyramiding inside of that down close candle. My mentorship students know exactly why. The market displaces higher and we see the market displace above this CB in which we formed a high with a BC. And that is my market structure shift pattern as I've been teaching it to you publicly on my YouTube channel. If you do not understand that pattern, trust me, watch those lectures on the topic and you're going to be amazed by how many times it occurs inside of every single market reversal. If you zoom in close enough on the lower time frames, you will always see this fractal there. The market retraces into that BC and I'm pyramiding there again. The market expands higher and it eventually engineers more buy-side liquidity. 10:30 opens up, which is the beginning of a new 30-minute cycle. And the market opens up, drops lower, and I'm pyramiding inside of the drop lower. We eventually see the market refer back to that old high again, which formed inside of this CB, find support there, and then the buy program begins. And we begin to see the market spool towards the upside during that 10:30 to 11:30-minute cycle. I'm parsing accordingly because at the same time, whilst I'm monitoring Nasdaq, I'm also paying attention to how is ES delivering. And because I wasn't certain about the higher time frame analysis, because we were near the range low and there were signs present that we might drop lower for the remainder of the week, you can see that I was parsing at every single key swing point. Meaning I'm parsing the moment the price begins to expand in my favor and reaches key buy-side liquidity objectives, whilst the intermarket relationship is telling me to do so. Notice that we eventually reprice above that buy-side liquidity from the 1-minute chart and we trade above the macro high. Eventually the market consolidates there for a while and it reprices to that 9:30 open price and to that 1-minute CB. Notice that when we reached that level, the market turned around and it dropped towards the downside. This was a beautiful expansion towards the upside and this is textbook buy program. And I want you to investigate the fine details which you can find inside of this delivery. Meaning, there are so many algorithmic signatures over this delivery that if you spend some time paying attention to all the details that are present, man, oh man, you are going to gain a level of understanding that's going to completely change your perspective on the markets. Even if you're completely new to my channel, even if you're completely new to the lectures which I'm creating, if you go out there and you just investigate the basics of time cycles and the basics of AMD, I'm telling you, your mouth will fall open because this right here shows to you that there are algorithms in control of the delivery of price. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to learn something from it. And I look forward to catching up with you in the next one. Have a nice remainder of your Sunday and be safe.